Good morning, investors. You are now on KleverStock with me, Ainunjara, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. The FPM KLCI is trading cautiously today after yesterday's heavy sell down rattled investor confidence. Rakuten Trade described the sell-off as rather drastic, with daily trading volume spiking above the 4 billion level. The brokerage says while there are hopes for an immediate rebound, confidence may have been dented, leaving the index likely to hover between 1,580 and 1,590. At the opening bell this morning, the benchmark index was nearly flat, inching up just 0.18 points to 1,581.77. Banking heavyweights offered little support. Maybank held steady at 9 ringgit and 75 cents, while public banks slipped 6 cents to 4 ringgit and 36 cents, following earlier sharp profit-taking tied to the MSCI rebalancing. According to Malacca Securities, the FPM KLCI's drop below the 1,600 psychological level reflects caution, but technical indicators remain somewhat positive. The firm notes that the MACD histogram is in positive territory and the RSI stands above the 50 level. Key resistance levels are seen at 1,596 to 1,611, while support is pegged between 1,561 and 1,566. Among early movers, Kuala Lumpur Kapong dropped 14 cents to 19 ringgit and 56 cents. Petronas Chemicals fell 12 cents to 4 ringgit and 67 cents, and M-Bank lost 5 cents to 5 ringgit and 45 cents. On the gainer side, Magma climbed 3.5 cents to 34 cents, Pharmaniaga rose half a cent to 17.5 cents, and VTC added 2 cents to 32 cents. We should now look at the performance of our local currency. The ringgit opened higher this morning, lifted by growing expectations of a U.S. interest rate cut amid weakening consumer confidence and concerns over tariffs. At 8 a.m., the local unit strengthened to 4.2060 or 4.2265 against the US dollar, up from Tuesday's close of 4.2160 or 4.2210. Bank Muamalah Malaysia Berhad Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid said the US dollar index slipped 0.21% to 98.225 points, reflecting market bets on a cut. He added that a dispute between US President Donald Trump and Federal Reserve officials over the dismissal of a Fed governor has raised doubts about the central bank's independence. It remains to be seen whether Trump has the legal justifications to pursue such a decision. On that note, the ringgit could stage a rebound, with the USD MYR likely to hover around the psychological level of 4.20 as the Fed is expected to cut rates at its September meeting. The ringgit also firmed against major currencies at the opening. It strengthened against euro to 4.8949 or 4.9188, rose against the Japanese yen to 2.8519 or 2.8660, and appreciated versus the British pound to 5.6684 or 5.6961. Against ASEAN currencies, the local note was also mostly higher. It edged up against the Singapore dollar to 3.2716 or 3.2878, edged higher versus the Thai baht to 12.9615 or 13.0351, and improved against the Philippine peso to 7.37 or 7.41. The ringgit was nearly flat against the Indonesia rupiah at 258.0 or 259.4. Now moving on to economic updates. Pharmaniaga Berhad has posted a strong second quarter performance, with net profit climbing 41.4% to 3.96 million ringgit for the quarter ended June 30th, 2025, compared with 2.80 million ringgit a year ago. Revenue for the quarter rose 10.6% to 926.9 million ringgit, up from 838.3 million ringgit in 2024, supported by higher demand from the concession segment, particularly increased orders from government hospitals and new products added to the approved products purchase list. For the 6-month period, net profit stood at 33.54 million ringgit, up from 28.44 million ringgit last year, while revenue reached 1.98 billion ringgit compared to 1.80 billion ringgit previously. Managing Director Dato' Zulkifli Jaafar said the results mark further progress in the group's recovery and pave the way for its eventual exit for the PN17 status. He said that in our biopharmaceutical segment, we are encouraged by the progress made in the human insulin program. We recently secured additional tenders from several major teaching hospitals and completed 9 process validation batches in May 2025. The stability data is currently being generated and we aim to initiate registration by end year. Pharmaniaga is also expanding its presence in Indonesia. The company is in the final stages of launching its 37th branch in Palu, Sulawesi in the 4th quarter of 2025. In addition, 2 new products were rolled out in the 2nd quarter to strengthen its pain management and anti-infectives portfolios in that market. Now moving on to corporate news update. AirAsia X Berhad has reported a sharp jump in earnings for its 2nd quarter ended June 30th, 2025, with the net profit surging to 35.2 million ringgit compared with 4.8 million ringgit a year earlier, driven largely by favorable foreign exchange gains. Revenue, however, eased to 660.8 million ringgit from 669.1 million ringgit as capacity rose 6% year-on-year to 1.12 million seats in what the company described as a seasonally softer fare environment. Passenger traffic also grew 6% to 935,105 passengers, holding the passenger load factor steady at 83% year-on-year despite the added capacity. Its associated AirAsia X Thailand posted revenue of 372.82 million ringgit but recorded an operating loss of 13.2 million ringgit in the quarter. As of June 30th, AirAsia's X total fleet stood at 19 A330 aircraft, of which 18 were active. Thai AirAsia X operated 9 A330s after returning 1 to a lessor during the period. For the first 6 months of 2025, AirAsia X posted a net profit of 85.4 million ringgit compared to 85.0 million ringgit a year ago, while revenue rose to 2 billion ringgit from 1.6 billion ringgit. Chief Executive Officer Benyamin Ismail described the results as resilient, saying that we delivered a sound passenger load factor of 83% in line with capacity growth despite the seasonally softer 2nd quarter. Ancillary revenue continued to drive our margins as we enhanced product personalization and improved value bundling. He added that 1 aircraft originally planned for reactivation in June had been deferred to the 2nd half of the year due to global MRO backlogs and spare parts shortages. He said, while we are eager to return the aircraft to service, the safety of our guests and crew is of paramount importance, as the company is committed as ever to returning the aircraft without compromise. Looking ahead, Benyamin said AirAsia X is preparing for stronger demand in the busier quarters of the year, supported by favorable jet fuel prices and a stronger ringgit. Combined with discipline and management of costs and operational efficiencies, they are confident that these efforts position them well for sustainable growth. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Malayan Banking's 2nd quarter of the financial year 2025 net profit rose nearly 4% year-on-year to 2.63 billion ringgit as higher income offset rising provisions for bad debts. Public Bank's 2nd quarter of the financial year 2025 net profit slipped 1% year-on-year to 1.76 billion ringgit. Dragged by lower non-taxable income, the bank declared a first interim dividend of 10.5 cents per share. II Properties Group's 4th quarter of the financial year 2025 net profit plunged by 47% year-on-year to 823.9 million ringgit due to lower fair value gains from investment properties and higher interest expense following the commencement of operations of IOI Central Boulevard Towers. MBSB's second quarter financial year 2025 net profit jumped 74.28% year-on-year to 95.56 million ringgit from 54.8 million ringgit, mainly attributed to 41.53% decline in expected credit losses on loans, financing and advances, and other impairment. And finally, Pharmaniaga's second quarter financial year 2025 net profit up 42% year-on-year to 4 million ringgit, driven by stronger demand from the government's concession. Now that's a wrap for more development updates with me, Ainun Jaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live coming soon.